So ladies and gentlemen, on behalf of the COO Network, welcome to today's forum. My name is Mandip and I'm the founder and the board member of the COO Network. By way of a quick background for some of you who haven't yet interacted with the network, we are a not-for-profit institute and we aim at supporting C-suite leaders, particularly with a platform to help them connect with their peers around the Middle East region, specifically as there isn't a network of this sort within that area. We try to share and receive insights from key knowledge partners, of which some you'll see today, but also helping our C-suite members to support them really with the emergence of new skills, which have become particularly relevant in today's environment. Over the course of the past few months, we've been extending our support to our business community, particularly in the MENA region, but also expanding out to the rest of the world by offering specific member benefits. Therefore, for many of you today, this will be the first time that you are joining us. So once again, welcome on behalf of our board members and the network. The network itself has been established by senior professionals from the market who specialize in key principles, particularly in driving the leadership agenda. You'll see many of our leaders have shared a lot of their insights over the last few months, particularly around sort of post-pandemic world and helping our members to manage continuity. You'll notice one of our board members, Peter, today is running our FinTech session from Beehive FinTech. So thank you again, Peter, for taking time out and joining us. Several of these leaders specialize in the FS industry, which has been quite a popular industry for our members. And so we're pleased to be hosting this very first inaugural financial services hub, which is a subdivision of the support that we will lend, but helping to develop real insights that impact the FS industry. Among many of our other relevant issues, banks, just like any other industry, I guess at this moment in time, has really been impacted by the need for green recovery. Everybody is talking about green recovery, particularly as stakeholders, regulators, and customers are now starting to become much more clear around the environment and social impact, but some of the issues that they have in terms of a deep direct influence on economic stability. Perhaps one of the main macro challenges, I guess, that banks are experiencing at the moment is tighter regulations, increased competition from shadow banks, and as we will talk about today, the new digital entrants. Now, digital banks have not been new, they've been around for quite a while, but they're receiving a real large impetus now, particularly with new entrants of challenger banks who have gone fully digital. The situation, I guess, provides many benefits, but also it has risks associated to it that will require some regulatory response. Our forum today will aim to address some of these challenges in further detail. Of course, we could not be discussing such matters in depth without the knowledge and insight of our expert panel. So I'd like to thank each and every one of you for joining us today and taking time out to share your insights. We are represented by brands, as you will hopefully see on your screen, some senior experts from each of those organizations who have taken real time out to share with us their thoughts on how banks are being impacted, particularly in the digital era. To commence our forum, I'm delighted to both introduce and welcome our moderator today, Kevin Hassler. Kevin is a senior director at APCO Worldwide in his office in Dubai. He's a highly experienced strategic public relations and comms consultant with 20 years of experience advising both government and private sector organizations in both Europe and the Middle East. Kevin began his professional career as a journalist in his native UK before moving into public relations. Since leaving the UK, he has managed and led public relations businesses in 7 countries across Europe and the Middle East. His Middle East experience now includes a total of nearly 18 years living and working across the Gulf. An experienced moderator, he has just very recently hosted a 2-day virtual boarding for Norton, has hosted international tourism webinars, and is a regular host and moderator at the Emirates Airline Festival of Literature in Dubai, where he will be again this weekend. He tells us he hears panel members on stage, which is where he will be social distancing, so we hopefully look forward to seeing him at that. With that, I'd like to welcome you all and hand over to Kevin for the rest of the session.
Thank you very much indeed, Mandeep, and welcome everybody, both our panelists today and everyone who's dialing in. I think the fact that this is actually a virtual session this afternoon sort of very much reinforces the impact of the pandemic and the changing circumstances that we've all seen over the last 12 months, which I think makes today's agenda and the debate we're going to have over the next hour and 3/4 very pertinent and more relevant than ever. Our agenda this afternoon is we're going to kick off with 4 panelists talking about sort of the virtual bank and its impact on industry. Then we're going to break out into 2 separate rooms. I have 2 different streams, one of which is demystifying fintech, and the other one is about how we move from a legacy to more agile systems of financial services moving forward. So I think we'd really And I'd like to obviously thank everyone who's going to be participating today. MEME, the Gulf Chartered, the Standard Chartered, Beehive, BIBF, Gartner, HCL, Refinitiv, HubPay, and Omnia. So I think really without further ado, I'd like to sort of welcome our panelists for the first session, if we can go to the next slide. And I'm delighted that we've got a range of expertise from across the region on board to discuss this in the virtual bank and the impact industry. And we have Mohammed Al-Ajmi, who is the Group Head of Retail at MEME Digital Banking by Gulf International Bank. Mohammed Abdulrazak, who's CIO Africa, Middle East and Islamic Banking at Standard Chartered Bank. We have Ziba Askar, who's Head of Banking and Finance at the Bahrain Institute of Banking and Finance at BIBF. And finally, we have Peter Taverner, who's the CFO and COO at Beehive FinTech. And I think obviously the whole FinTech space has really exploded in the last year due to the pandemic. So without further ado, I think I'd like to sort of address my first question to our panelists. And I think we'll start in Saudi Arabia with Mohammed Al-Ajmi. And the question I have, and this will be for each panelist, is given the situation, the massive change there's been in the banking system, are brick and mortar banks set to disappear from the high street? Are they going to be a thing of the past, a legacy issue, and we'll just have digital banking alone? Mohammed, what's your perspective sitting there in Riyadh?
Thank you, Kevin, for the question, and hi everyone. Delighted to be here. I think I can answer that question in twofold. First of all, moving away from traditional banks to more digital banks is not the end of technology. I think the technology we have today is quite capable in delivering almost everything. I think it's more linked to moving away from traditional currency to cryptocurrency. That will allow digital bank have a better outreach on the operational side, will reduce the overhead cost, and also will make it easier to collect any assets distributed to the market. This is my opinion and how I read it going forward. If we still link central banks, people to traditional currency, that will always be difficult to move away from traditional banking. The other side of it, which actually is very controversial, is how much people is willing to give away from their personal information and privacy. Banks were required to do due diligence when you open an account, understand what kind of person you are and what kind of behavior, what's your credit behavior. And this is on the normal situation. When we talk about the virtual world and the web world of virtual banks, of digital banks, the level of information that will be required to be released by the individual will be much more and will require also, it's not going to be one time. The frequency of collecting the information will be more frequent. And that depends on how willing people and government is willing to give information to these banks. I know there is a lot of talk about, for example, social media and how these social media platforms have taken a lot of the personal information of people and deal with it as a commodity. I think very soon, virtual bank or digital bank will be under that same spotlight. This is my take on it. Hopefully it makes sense.
If I may, Mohammed, just a quick sort of comeback question on that. I'm just thinking in a country like Saudi Arabia, where unlike sort of other parts of the Gulf, certainly the UAE, for example, you have a much more sort of settled and perhaps older population there. Do you think it's going to be a challenge perhaps for sort of people in their 50s, 60s and above, sort of making that transition to digital banking? Will it perhaps be slower in a market like Saudi Arabia than perhaps it would be, say, in the UAE, where there's a much younger demographic?
Well, I don't know where you get your statistic from, but Saudi Arabia have a very young population. We're talking about 80% of the population between 25 and 45. And it's a very young nation, very technology savvy. And if you look at statistics and using platforms and either social media platforms, I think we have the highest penetration levels in some of these platforms globally, not only in the region, especially in Snapchat and YouTube. So back to your question, coping, is it going to be a challenge? Not at all. I think we have a very educated population that is actually proven to use these platforms in a very simple way and straightforward.
Okay, thanks, Mohammed. Ziba, perhaps if I could come to you and sort of, what's the position in Manama? What's your view on this in terms of brick and mortar banks disappearing? Are they something that's going to be gone sooner rather than later? What's the view from Bahrain?
First of all, good morning, and thank you for having me participate in this panel. So my view actually is that over the past years, banks were already on their digital transformation journey, and what we've seen in 2020 with the COVID is that it reminded us that the speed of change sometimes can take sectors by surprise. So many of the banks who had been planning to introduce digitalization into their business had to speed it up because many of the bank clients actually had no choice but to use digital platforms in order to do their banking transactions. And I think by now there is definitely a change in customer behavior, and people are now embracing fully integrated digital and mobile banking experiences, whether it is from buying products or opening new bank accounts. But what I would like to add is that people actually have psychological need for face-to-face interaction and personal engagement with their bank officers, especially when it is in times of distress and confusion, and physical banks could be perceived as a safe haven for many. And another thing is that we need to bear in mind that even though there are different kind of demographical clientele for the banks, however, there are certain clients who do not have the digital literacy to actually know how to use digital platforms, and they could still be cautious about doing digital transformation, maybe because they don't have, first of all, the skill, and secondly is because of security concerns. So although I would say that the high street banks are now in the customer pockets through their phones, but the role of the brick and mortar banks will remain important. But I see it that in the long run, it will change in the form it is going to be there. So instead of it being a fully fledged bank providing services, it could convert into more of an advisory role, so guiding clients who are having problems with their banking products, instead of just providing conventional services.
If I may just quickly come back, Ziba, it's interesting what you were saying about the challenge of digital literacy. How do banks or central banks perhaps get around that in terms of educating people about how to bank online and feel comfortable and safe? Because I know some people are sometimes worried about, should I use the app on my phone? Can someone hack my password, etc., if I'm using online banking?
So in Bahrain, we have the central bank continuously keeps on sending updates and sending messages about security measures and cautious that need to be in place. I can tell you about an initiative that we did at the IBF in collaboration with BBK, which was actually targeting especially women who are staying at home who do not have any kind of digital literacy. So what we did is we trained them on how to use these kind of applications, especially not maybe specifically to banking, but even assisting their children at home with schooling and how to use digital platforms. So these are some of the initiatives that we have taken.
Okay, thanks. That's really interesting. Now perhaps if I can sort of pose the same question to Mohammed Abdul Razak at Standard Chartered. What's your view? You're a CIO, you're very much into information technology. How quickly do you think are we going to see digital banking replacing and supplanting the traditional brick and mortar bank?
Yeah. Thanks, Kevin, and actually a very, very pertinent question. And I'll just add to what Mohammed and Ziba have been saying as well. So there's quite a few angles to look at in terms of the technology change, and also let's not forget banking is not only retail side, but you have the corporate and the institutional and the sovereign that require a heavy treasury as well, right? So these are the things that inevitably will continue to work on very strong business relationships and the trust that is there between the traditional bank and the client. Now on the retail side, definitely there's an acceleration. So My point of view is, will we see more digital? Absolutely. Has it accelerated in the last year? Definitely. And there are, though, it's going to be quite a long journey in my point of view, because we have quite a few things that are have to transform. I'll give you an example. Regulation. Not every country is regulated at the same pace. They have not regulated in terms of technology, of cloud, data privacy, data residency, the ICS threats. So there's quite a bit of regulatory catch-up to do in terms of regulating those things that facilitate more digital banking, right? I mean, I have certain countries, and I have 25 markets in my remit, are looking at onshoring data centers, for example, rather than allowing cloud and open banking. We have the culture of users. I think you tried to mention it about age demographics or digital literacy. There is a culture where people continue to struggle with digital, and they still have a very paper-based, even paper-based regulation. I'm from Egypt, for example. You still have a lot of paper-based regulation, or must see KYC, face and ID, versus a digital onboarding. So this is going to be a continuous journey. Another piece of it is the funding and the limited capacity to change the technology that fast. So I think it's going to be a journey, but definitely a higher digital asset rather than a brick and mortar. As we add more services like lending, wealth products. Today, onboarding and transactional banking is there in terms of retail, but you need to add a lot more services to make it pertinent.
Okay, thanks, Mohammed. That's very interesting. And now finally, I'd like to sort of hand the question over to Peter, but maybe with a slight twist. Given that you're in the fintech space, Peter, I'm just wondering, this acceleration towards digital, does this ultimately, something that Mohammed Al-Ashmi was saying, does this mean we're going to look more towards moving towards cryptocurrencies, digital currencies, Bitcoin, whatever that may be, and perhaps this is going to be the death knell for cash in the future?
Yeah, thanks. I mean, I think ultimately, if you look at it, all cash is digital. Yeah, there's a small amount of physical cash running around, but in reality, I think it's something like 1 or 2% of physical cash is out there. 98% of cash is digital. Yeah, there aren't physically the amount of cash around, and I think everything will move towards digital. It's purely a matter of time. I think what you will see, though, particularly on the crypto side, is that in reality, it'll be central banks releasing their own digital currency. That's what you're going to see. I know there was talk around the Central Bank of Saudi and UAE Central Bank. There's talk around there being a digital currency there, which makes just a huge amount of sense. I mean, the idea that the Saudi Riyal and the UAE dirham, they're both pegged to the dollar. Huge amounts of transactions go between the two countries, and yet banks at this current point in time make money off that forex going between the two, even though ultimately they're pretty much pegged one for one. So it makes complete sense that things do move towards that. I mean, expanding upon the question of just generally around bricks and mortar is, I guess, is quite often a question of will banks survive? And my general view is yes, banks will survive. I think people need banks. Banks will change significantly. We've talked about trust issues. If you look at all the issues that went on with Facebook when they were trying to release Libra literally 2 years ago, and how ultimately that completely fell over because people just weren't safe basically using financial data with basically the big social network businesses. So I think what you'll see is that the banks are needed, banks will transform. Yes, digital currency will come forward. I still think, and I think it's been mentioned already, there is a need for physical branches of some nature, but it might be that those physical branches change. So as Zina mentioned, the idea eventually that they maybe have advisory. The alternative is you can look at what I know bookshops have done, and bookshops have become cafes, haven't they? The two of those that have blended together to try and offer something different. There's a reason you want to go there. I think it's going to be a lot more pop-up services and kiosks where basically people can go to. But if I look at my own personal desire, I've been a Citibank member, for example, for 8 years. I've never once been into the branch in Dubai. I don't even know where it is, if I'm being really honest. So for 8 years, I've only ever done online banking and mobile banking. It shows that it can be done, and I think there's a huge swathe of people, as Mohammed said earlier, particularly in Saudi, and the same is true here in the UAE. A huge swathe of people who want to do it, but there is, as you alluded to, Kevin, a slightly older portion of people who maybe aren't tech savvy and might get left behind, and therefore people need to be protected. And as Mohammed from Chartereds said, that's where basically the regulation also needs to catch up as well, because if, for example, they are still requiring paper, as most of the countries do, to be honest, you do still need physical branches where people can come in, ask questions, but also provide information so that actually they get onboarded in the first place.
That's interesting, Peter. Maybe it sounds like we should be... I'm sorry. Go ahead.
If you allow me, I want to comment on something. I think I was misunderstood when I talk about cryptocurrency. I wasn't referring to the physical cash itself. I was referring to having a cryptocurrency system in place that will allow a bank to collect debt from the cryptocurrency system, because the reconciliation and settlement of cryptocurrency is totally a different regime when it comes to the normal currency, regardless if it's in a physical cash concept or it's a number on the bank. That I just want to clarify that.
Thanks, Mohammed. Very, very helpful for that clarification. I was just going to say, Peter, it sounds like there could be a new marketing opportunity for banks, and we could create cafes called Loans and Lattes, I think, is how I was going to brand it. I can just see that opening up at my local bank. But my next question is, in fact, related to, I think, sort of banking sector. I think certainly I've lived in this region for the best part of 2 decades, and I think certainly historically some markets, the UAE being one, has always been seen as being overbanked. Too many banks here. We've seen that with some of the mergers in recent years. But I was just wondering how the panel feels about how a global challenger brand such as Monzo Bank or perhaps Starling Bank going to impact the industry here in the region, and what it's going to do for the MENA banking scene in the future. Perhaps we'll start in Bahrain, which obviously traditionally has been one of the heartlands of the financial services industry in the region. Siba, what's the perspective there on the impact these challenger banks may have?
So if we think of these, the business model of these banks, they are actually having less capital intensive kind of business model, therefore their overhead cost is less. They are depending on technology to do a lot of work that traditional banks are using, obviously staff and employees to do it. The speed of coming for decisions and processing things is much faster with these banks compared again to the traditional one. But on the flip side, I would say that the traditional banks, they do have the depth and the breadth in the market, and they are pushing ahead with digital transformation, especially with what happened with the COVID. Even if they had plans before, it actually they actually speed it up to implement everything. And also these digital banks, they are utilizing a lot of AI data analytics, which makes them, again, it is helping them in terms of the speed of information and also the way they offer the products, how easy they are. So if we are looking at, for example, what my colleague mentioned about Saudi and about the demographic of the market being young, and what is the expectation of that generation? They want something that is easy, something that is flexible and kind of personalized, which is what these challenger banks are able to offer. So there is a lot of challenge, and for traditional banks, they need to incorporate design thinking into planning. They need to offer products that are easy. Even their platforms, they need to be easy. So if they compare themselves with these challenger banks, they need to be as easy and as simple in terms of processing.
Thank you, Siba. I'm just wondering, from a Standard Chartered perspective, Mohammed, are you concerned about some of these banks coming and taking a slice of your pie?
Well, Yes and no. In a way, first of all, if we digitize fast enough in our traditional bank and have one or two service centers left and everything else is digital, we're already at the challenger bank perspective. We're there in digital onboarding. We can give loans digitally. So we have reinvented ourselves in form of a digital format. So the challenger bank being less capital investment or capital intensive, we would be as well very light by the time they hit the market fully. The other thing Standard Chartered has done is we've launched our own digital bank in Hong Kong. It's called Mox, our new brand, out in Hong Kong, which is a fully digital bank. There is no brick and mortar. It's a separate technology stack built, and it's gone live the tail end of last year. And we will see the difference in the demographics and how we can use Mox and when can we use our reinvented selves. So in a market where we are today, let's say where we only have a CCIB branch or corporate and institutional, we would maybe launch retail using Mox and using the Mox stack, given if it meets the regulation in that country with cloud and data residency and all of those other things. So in a way, the digital challenger is here and it's here to stay. But in another way, we've accelerated. We've closed over 70 branches across Africa last year. And we've got into a very high digital, including onboarding, and we're putting more services like lending and wealth, insurance, all from the mobile, and therefore much less requirement, and we would be in the same class as a challenger bank. So we're using our reinvented selves to challenge the challenger, let's say.
Okay, sounds interesting, exciting times for Standard Chartered. Now perhaps going to Saudi Arabia, Mohammed there in Riyadh. Often when we make that decision on a bank, we're a little bit conservative. We tend to go to a bank we know that's trusted. We've heard of the brand and they've been there for many years. I'm sure that's as true in Riyadh as it is anywhere else. What's your perspective there about some of these new digital challenger banks? Do you think that's going to impact or disrupt the Saudi banking market?
I think the Saudi banking market is not different from any other market. And if you look at existing Saudi banks, they are quite limited banks with good history, good capital, and quite protective when it comes to the regulation. When it comes to, let's say, recognition of these digital bank, I think yes, it will be a challenge, especially in the older kind of generation, how to convince them that they can bank through their mobile phones and not having a physical place. We had some questions from some of our potential clients that says, how can I bank with a bank without a branch? And we go back to him asking him, when the last time you went to the branch? And it will need time to resume. The good thing is about digital banking in Saudi, it's something is driven top down, which is part of the Vision 2030 and improving the financial sector in Saudi Arabia, which is one of the pillars of the vision. That part of the vision, or that KPI of the vision, that drove the market to a totally different direction, not only when it comes to digital banks. I think Mohammed Abdul Razak from Standard can share his experience for opening their branch, for example, in Saudi Arabia. And Peter also can talk about his Beehive experience that happened lately in Saudi, which is things will never happen under the old kind of rigid kind of regulatory requirement. So as it's driven from top of the house, as they say, I think it will have better acceptance. The government will protect it, and also there will be regulation that will also make sure that it grows to the right direction. Gonna be challenges for people accepting that concept, yes. Is it as big as it used to be? No. I think it's more acceptable by people.
Thanks, Mohammed. And finally, we'll just come to you, Peter. Just wondering what your perspective might be on this, and perhaps are these challenger banks almost going to, as you know, Mohammed was talking about at Standard Chartered, almost going to help accelerate that process of traditional banks getting more digital, getting more tech savvy with their customers?
Yeah, I think to an extent, but I mean, Kevin, you're from the UK, so you'll remember First Direct, which opened up in around about 1990. So First Direct, for people who don't know, was part of, when it opened, it was before even HSBC took over Midland Bank. So back in 1990, First Direct launched as a complete standalone subsidiary with a complete separate team, purely through telephone banking, basically. I became a client of theirs back in 1991 or 1992, that sort of time. And I'm still a client of theirs 30 years later, effectively. And you know what First Direct did was they became online only in around about 2006, 2007, I think. So that's like 15 years ago, basically. So they did that 10 years before challenger banks came along. So you actually had a lot of the banks actually doing all this stuff anyway. I think there's also a very important point to pick out, which Mohammed from Standard Chartered touched on, this retail versus corporate. The majority of the digital banks are focused on retail, and it's all around how can we get people on board, and company banks like Revolut, N26, for example, out of Europe, the biggest, which is Nubank out of Brazil, Chime out of the US, they're all doing great stuff, but what they're not actually doing is actually transferring that many clients over to them who use that account as their main account, and that's the critical thing. So they're getting people on, but people are still going, well, I'll still keep my HSBC account, I'll still keep my Standard Chartered account for doing my day in, day out stuff, but I'll use the Revolut account for doing other stuff. I think where the digital banks really stand out is when they can offer services that the current banks just can't do. So for example, going back to a Revolut account, let's say you want to go buy Bitcoin. Yeah, you can do that through Revolut. You can't do that generally through most bank accounts. If you want to go and buy Apple stock, you want to go buy Tesla stock, you can do that through Revolut very, very easily. You can't generally do that through your bank account. And that's the area really where they can really focus on. And then the flip side is somewhere like Liv in the UAE, where they're purely targeted at a much younger demographic. And so in reality, they're going, what's that younger demographic want? They want to act in a social platform way. They want, buy one pizza, get one pizza free type tokens. Yeah, things again which banks just don't offer. If you look at the SME type banking space, and there's relatively few. There's things like Judo out of Australia, Oak North out of the UK, and those ultimately are in reality pretty much normal banks doing normal credit, just very, very, very efficiently. And that's actually where they differentiate. Will you ever see a big corporate bank in a pure digital, as a digital challenger? Probably not. Banks for corporates don't need to be purely digital to that extent. But I think it's interesting how the challenger banks get a lot of press, they get a lot of valuation, obviously, and I think what they're probably doing is actually ensuring that other banks, and Standard Chartered example is a brilliant one. You look at Goldman Sachs, for example, they got their markers out. I know that it was JP Morgan who tried to do Fin, but that failed ultimately. But all these other banks are also trying to bring out Challenger Bank as well, to basically try and be one step ahead, or at least stay in step with what those banks are doing.